Hello and welcome to Startup Street. I'm Arundhati Ramnan and with me is Ritu Singh. These are the top headlines from the startup world. Investment firm Chris Capital Management secures $2.1 billion for its latest private equity fund. According to Bloomberg report, this fund raise makes it the biggest capital raising by an Indian buyout fund. Bessemer Venture Partners announces the close of a $350 million India-focused fund. This is its second dedicated India fund. This new fund will prioritize investments in artificial intelligence, enabled services, SaaS, fintech, digital health, direct-to-consumer brands, and cybersecurity. The co-founder of Flipkart, Binny Bansal, launches a new venture, Optra. This will help consumer brands take their local expertise to different Asian countries. Ola Electric stock gains after EBITDA guidance for first quarter. Management tells CNBC-TV18 the positive impact of the implementation of its network transformation and OPEX reduction program will reflect in Q1 of FY26, and that path towards profitability began a few quarters ago. Ride-hailing startup Rapido is reportedly in talks with restaurant partners to add food delivery services on its platform. As per ET report, this puts them in direct competition with Zomato and Swiggy. It's believed that Rapido is trying to introduce a new commission model different from that of Zomato and Swiggy. Zomato founder Dipinder Goyal takes a bet on aviation startup LAT Aerospace by investing $20 million. According to an ET report, the startup will develop low-cost short takeoff and landing aircraft. India is Blackstone's best-performing market globally, with gross returns of 40%, as founder and CEO Stephen Schwarzman adds the PE firm's assets under management could double to $100 billion in the future. That's a Money Control exclusive. Specialty chemicals manufacturing startup Simplify lands $40 billion of investments in Series B funding. This fund is to scale the platform and expand its global footprint. This brings Simplify's total funding to $54 million following seed and Series A rounds. Those were the headlines that we're tracking for you this evening. But on what's brewing today, Marico Innovation Foundation, which drives impactful innovations in India, successfully hosted the 10th edition of the Indian Innovation Icons at the Geo World Convention Center. 7 game-changing innovators were identified through 2 rigorous jury rounds led by business and social impact experts. Selected from over 1,000 entries spanning diverse sectors, the winners are revolutionizing industries with their breakthrough ideas. The winners in the business category include Astrom Technologies, Chara Technologies, Indra Water and Skyroot Aerospace. In the social category, Assistech Foundation, Rocket Learning and People's Archive of Rural India won, while National Payments Corporation of India won the Global Game Changer Award for democratizing digital payments in India and globally. Joining us now are 3 of the winners: Surya Prakash K, the co-founder and board member of Assistech Foundation; Krunal Patel, co-founder and CEO of Indra Water; and Bhakta Keshav Char, co-founder and CEO of Chara Technologies. Gentlemen, thank you so much for joining us on the show today. And, congratulations to all of you. Surya Prakash, let me start with you. Assistech Foundation focuses on empowering persons with disabilities, right? If you could sort of take us through how you do this and the kind of impact that you've created.
Thank you. Good evening, and thank you for having us. And big thanks to Marico Innovation Foundation for recognizing our efforts, and congratulations to the co-panelists also. See, Assistech Foundation is a social impact NGO working in the space of disability. We are India's first AT Assistech ecosystem that focuses on empowering people with disabilities using technology. We try to make an impact on 3 dimensions, which we call the 3 Ls: learning, living with independence, and livelihood. Most of our programs, we pivot on leveraging technology to enable disruption in this space. And our aim is to build one of the world's leading innovation ecosystem for disability tech. What we did get recognized for was our flagship program, which is the Accelerator for Assistive Tech Startups. In this accelerator, we have nurtured over 54 startups over the last 7 years, and we have built a pipeline of around 450 startups that we tap into for various programs. In the accelerator, we have established what we think is a unique multi-stakeholder approach that promotes collaboration between a startup, a corporate, an NGO, policymakers, government initiatives, impact investors, and give them access to also top-notch tech and business leaders as mentors. through this, we try to make these startups sustainable and scale, and eventually empower India's assistive tech ecosystem to develop scalable and affordable solutions. I mean, we're proud to say that we have enabled about 110 plus 80 products and have secured 50 patents and enabled a fundraise of 80 crores in this space.
Right. Krunal, at Indra Water, you recycle sewage, industrial wastewater. If you could sort of take us through what it means to win this award and tell us about your impactful innovation.
Yeah. So again, thanks for inviting us and this opportunity. At Indra, we have developed decentralized, compact, modular, electrically driven wastewater treatment technology. We use our patented process Electrox, which essentially is non-contact microelectrolysis, which destabilizes and removes some of the most stubborn, tough to treat pollutants, which are generally observed in industrial as well as non-industrial wastewater streams. The very basics of it is using electricity to destabilize these pollutants and then filtering out. Our plug-and-play modular reactor makes our entire solution more easily accessible and available to these industrial wastewater treatment requirements. And of course, like winning this award was a great. We felt a lot of joy and pride. Especially, it's a testament to our team who have put in a lot of hard work in the background, and it's a sense of pride as well as motivation to continue pushing boundaries of engineering and development in the water treatment space, productization of a solution, which is something which has not been seen in this industry before. So it's a sense of pride as well as motivation to continue doing our good work.
Absolutely. And you know, Bhakta, at Chara Technologies, you're developing rare earth magnet-free electric motor systems for both EVs and industrial machinery, right? If you could take us through this winning innovation and, you know, what it means to have won this award.
Yeah, thanks for having me on the show. And of course, thanks for Marico for recognizing our work. After exiting EasyTap, my previous startup, I was looking for a bigger challenge to solve with wider impact and deeper impact. And that is when we came across this huge energy transition that's happening in this world from hydrocarbons to electricity. And in this electric future, motors will be at the heart of every machine. And today, all the motors pretty much have this rare earth-based magnets which make them work. Rare earth is a well-known problem. They're expensive, they're difficult to mine and extract. And of course, our friendly neighbor China has 90% control over the supply chain. So we wanted to build a sustainable and an efficient motor with all the technologies developed from first principles. So we have made fundamental innovation on motor design, hardware architectures, and critically the software algorithms that control the motor. And we have made this motor a reality. We are building a synchronous reluctance motors. Reluctance motors is a known technology. Original paper goes back to like 200 years ago, but nothing has been built and deployed mainly because of a bunch of engineering issues. We have solved all of that, and we are very proud to say that we are now shipping to 30 plus customers across the world, manufacturing the motors and controllers in our own factory in Bangalore.
Right, absolutely. And you know, we're running out of time, but Surya, if I could bring you back into the conversation and you could tell us in 30 seconds, the big targets and milestones for 2025 and the kind of revenues that you're making.
Yeah, we'll probably have to skip the revenue question because we are an NGO.
Right.
See, so far we have done we've impacted 1 million people with disability through our various programs. Our goal is to impact about 5 million people over the next 3 to 4 years. Yeah. For this, we'll do 3-4 things, right? First one is we have to increase the pipeline, right? I mean, we have about 450 startups from which to tap for our innovation network. We have very many CSR programs that we keep looking for more and more startups. We'll increase about 100 more startups. Right. We'll run a cohort for maybe another 30-40 startups. We'll bring some, we're trying to take these products into the high street by partnering with companies like Microsoft to display these products. We are running with CSRs to take these products and bring them to the poorest of the poor. doing all this, we hope that we will do a linear growth of this 1 million to 5 million over the next 3 years. Yeah.
And, Krunal and Bhakta, if you could quickly tell me your targets for 2025. Krunal, you first.
Yeah, so we have a very strong order pipeline upwards of 350 crores, and we are deploying our solution across industries like steel, manufacturing, chemical, pharmaceutical, even cooling towers, and of course sewage. And couple of our key installations are with few of our marquee customers like IHCL's Taj Mahal Palace in Mumbai, the likes of Aditya Birla Group, Tata's. So we are very confident on the foundation that we have built to scale up and have a hockey stick kind of a growth in the next financial year.
Right. And Bhakta, quickly, if you could tell us.
Sure. Our goal is to ship 1 million motors by the end of the decade, saving 500,000 kilograms of rare earths on this planet, which is equivalent to planting 10 million trees. That's the target. And in terms of revenue, we are starting now. We're about 5 crores this year, 40 crores next year, and go to about a few hundred crores by the end of the decade.
Great. Surya, Krunal, and Bhakta, we wish you all the best on this journey going forward. Thank you so much for taking time out and being here with us on Startup Street.
Well, American venture capital and private equity firm Bessemer Venture Partners has announced its second India fund, raising $350 million to support technology and innovation-driven startups. The fund is going to focus on early-stage startups and support them through subsequent growth stages across AI, SaaS, fintech, digital, health, consumer, and cybersecurity. Now, Bessemer first established its India presence nearly 2 decades ago and has since invested in more than 80 startups in the country. All right, so let's bring in Anant Vidurpuri, partner at Bessemer, for more on this. Anant, thanks very much for joining us here on Startup Street, and congratulations on your second India fund. Tell us about this second one and the unique investment approach that this fund is going to take compared to what Bessemer has done previously in India.
Of course. First of all, thanks for having us here, Ritu. It's always a great thing to be here. We've just closed our BVP India Fund 2. This is a $350 million fund. We were heavily oversubscribed, and we kind of closed the fund at a hard cap of this 350 number. Our sort of strategy in India is a 2-decade-old one. We're a very roadmap-focused firm. We started investing in roughly around 2006. Currently our most active roadmaps are around AI, around fintech software, around health tech, and around consumer internet. And we expect a large part of this current fund also to be deployed in those similar roadmaps. The tools that we are most excited about, of course, are the one around AI and the one around fintech software.
Well, how many startups are you looking to invest in with this $350 million? What will be the average check size? And are there specific themes across AI, SaaS, fintech, etc., that you're particularly looking at?
So we're actually a stage agnostic fund. While a majority of our investments tend to be super early at like the Series A stage. That being said, we can write a $1 million seed check. We can also write a $30 million growth check. So we're stage agnostic. What that means is that it's really hard to predict the number of companies because we may find an early stage opportunity, we may find a later stage opportunity. But given our stage agnostic nature, we expect to make a healthy number of investments over the coming years. Specifically, I think the sectors that we're most excited about, I think I talked a little bit about the opportunity that's being created by AI. And if you break down that opportunity, it basically exists in 4 different layers. There's the foundational model layer, which is building India-specific language models. There's the infrastructure layer, that is, how can you use those sort of AI models to build applications. Third is the application layer, and the fourth is the AI-led professional services layer. And if I was to pick, I think the last 2 are the one we're most excited about. That is building verticalized AI applications, as well as using AI plus a combination of humans to build the next generation of AI-enabled services companies.
Well, how soon will you start deploying the money then? And do you have any investments already in the pipeline?
So we expect to start deploying this fund pretty soon, so in the next quarter or so. We have a very full pipeline. I think the level of entrepreneurship in India has just reached a very different scale. So we have a full pipeline, and we're really excited on how to sort of go about deploying this fund.
Well, just to put this in context, in the last 5 years, more than 80% of your investments have been in Series A or earlier. Several of these companies have gone on to become unicorns. 9 of your portfolio companies have IPO'd as well. So keeping that in mind, what is the expectation from the second fund?
Look, I think, we always hold ourselves to, the highest bars of investing. And actually, we feel that, when we invest in a company, we always want to see that is an IPO, a path here, because that's the ideal path that we look for in all our investments. And as we think about companies, we expect all of them to cross $100 million of ARR and really scale, because eventually that's the sort of gold standard for large companies. So yeah, the bar is high. We've been really thankful to have been involved with some very high quality founders, and we hope we can find more of these founders, because we hold ourselves to the highest standards.
Well, Bessemer globally has listed Apple, Facebook, and so on as companies in its anti-portfolio, companies that it missed out on investing in. Do you maintain a similar anti-portfolio for India as well?
Yeah, no, I think we've got a great, we don't get everything right, and a lot of times we don't, get things right at all. I think there are definitely companies in India. I think companies like Nykaa, companies like BillDesk, which we didn't invest in, and maybe we should have. They've gone on to become very large companies, yes, there's always the ones that you'll miss. I think that's the sort of inspiration for us to keep on improving, to keep on trying to give even higher sort of bars for ourselves, and just make sure we try to find great entrepreneurs who are building great businesses.
All right, and any of your portfolio companies that are going to be IPO ready in the next 3 to 4 years, if any?
Yeah, I think the Indian public markets have actually grown a lot in terms of just the level of domestic capital that's there. And what that means is that they are far more receptive to these professionally managed, well-run companies that are often backed by VCs and PEs. So we think that's a very viable exit path for many of our companies. As we speak, several of our companies are in various stages of this IPO journey. It's obviously very difficult to time these markets and to time these things, but what I can tell you is that many of our companies are very actively looking at that path right now.
Well, lastly, what are your expectations when it comes to returns given the current market conditions?
See, I think the market conditions are not something that we control. It's also not really our core business to predict how the markets will grow. We take a very long-term view to investing. We think that we want to invest in companies that could be generational, which 10, 20, 30 years on could still be around and be large companies. With that lens, I think markets are less of a variable for us. If the business is good, if it's scaling and there is a consistent sort of compounding in the business, we know eventually we will, be pretty happy with that investment. So we don't actually spend that much time thinking about the markets. And, we think even as a founder, that's not something you can control. Our core kind of job is to find great entrepreneurs building large generational companies, and that's what we try to do.
All right, Anant, we leave it at that. Thank you very much for your time here on Startup Street today.
Thank you so much, Ritu. Thanks for taking the time.
On that note, it is time for us to head into a short break. But coming up on the other side, co-founder and CEO Mohit Yadav, in an exclusive conversation with CNBC-TV18, said that the company will continue to operate independently despite the acquisition by HUL. Stay tuned for more. Welcome back to Startup Street. Now onto a CNBC-TV18 exclusive. Minimalist co-founder and CEO Mohit Yadav has said that the company will continue to operate independently despite the acquisition. Hindustan Unilever is set to acquire Minimalist for nearly 3,000 crore rupees post-regulatory approvals. Speaking to Shireen Bhan, Yadav added that there will be no changes to their team and the operation will continue to be based out of Jaipur. Take a look.
You pretty much will continue to operate as an independent island within the large HUL framework. Now, how did that come about?
It was an easy decision. We needed this to happen. They were also aligned that this is how it should work, right? We should continue to operate where we are doing. We should continue to do what we have been so far. So I guess.
So you run the ship?
We run the ship, yeah. So
there's no change in that?
No change in that.
Even though ownership has changed completely?
Yeah.
Give me a sense of how you turbocharge the growth ambition and the growth plans for the company from here.
I think the three very easiest growth lever, one, as I said, is our offline expansion. So with them, we know which store, what data, what is relevant, not relevant, then exploring this entire piece, understanding, for the next 2 years, how many stores are relevant for us, how to plan. They already have an on-ground team. We can leverage a lot of those things, right? So I guess so far we are in some 2,000 stores, and we took almost 12 to 18 months to be here. In next 2 years, we can easily target anywhere between 15 to 20,000, right? 10 times more than what we have achieved. And all that, again, can be done very seamlessly. Second is international. While, of course, we started working in these markets, we have some bit of retail partnership. But every new market you enter, you have to, again, figure out who are the right channel partners. You have to have those relationships and all.
And that's where the Unilever system will kick in.
And that cycle take anywhere between 4 to 6 months, right? Again, with HUL, given they are present in most of these markets. And now, because of their prestige portfolio, even we know, say, which channels have performed better, say for Paula's Choice, K18, other brands, then what should be our distribution strategy? All that is now easily accessible. Third is the global R&D centers. Whatever we have been doing in terms of, our own clinical studies, test, evaluating ingredient, they have been working on multiple things. So we have a, easy resource we can tap in.
And before we wrap up the show, we leave you with a story on India's venture capital landscape, which is experiencing a powerful transformation. For many years, foreign venture capital powered the growth of Indian startups. However, a distinct trend is now emerging. The next wave of Indian companies is being built on Indian capital. How will this shift mark the redefinition of India's entrepreneurial landscape? Aishwarya Anand decodes. Take a look.
Indian startup ecosystem has raised over $12 billion in 2024. However, 85% of that capital has come from overseas investors, large sovereign wealth funds, large private equity players. Only 15% of domestic capital has flown into the ecosystem. Now, there is a big push to get more domestic capital invested into venture capital funds that will then go on to invest that into Indian startups. But how do we unlock its full potential, create deeper pools of limited partner capital, and more supportive policies? Let's find that out from some of the prominent voices in the startup ecosystem.
Family offices is one pool of capital. Another pool of capital is balance sheets of corporations. Can companies invest directly into startups? Now, there are a number of regulatory issues around companies investing in other companies. They might get classified as NBFC or core investment companies. So if some of those roadblocks can be removed, it'll help a lot.
We see lots new players have come in, but there is an entire, companies don't simply wake up and grow on their own, right? It's not simply about transacting. A lot of it is about, making sure that companies are able to access the right talent pools. It's about making sure that they understand the need to build the right culture appropriate for their business. It's about, the scaling up errors and issues that happen at different points in their life cycle. It's about understanding the Peter Principle kind of issues which inevitably happen in high growth businesses. It's about adapting to customer needs in an ecosystem and environment which is evolving rather rapidly. It's about, even evolving to economic cycles and customer shifts in preferences. So it's a lot, there's a lot which goes into making companies succeed, not just transacting. And I think that the onus is on participants in the industry, including ourselves, to make sure that we are actually, we can facilitate and aid these fabulous entrepreneurs that we see in a more effective way.
And what would be that more effective way, if I have to ask you? Because of course you need more, LPs need more funding from family offices. So how do we bring in all the factors together?
I don't think that it is because of lack of capital that we have an issue. The other thing that I think that, systematically the government could do, and I think they are doing it in some form and fashion, is to give preferential market access for Indian startups, right? And sort of promise that if you can develop A, B, C, D, E in different parts of the ecosystem and you're a domestic company, we will give you some kind of protection umbrella, etc. The sense I have is that the intent is there. Again, in terms of execution, if that's a little bit better, it would help.
Mr. Bhasin mentioned that there's no dearth of capital in the ecosystem, right? But it's players in the ecosystem who need to really work it out so that the inflow is much better. So if there is no dearth today, what are some of the roadblocks? Whether it could be, are there regulatory hurdles that you feel that exists for more domestic capital to flow in? Should that be eased a little bit more?
We have to understand and create a different classification, what's called an accredited investor. Right? Somebody who has a net worth of more than $1 million. In India, में से बहुत लोग हैं आज की date में. I don't think they need to be given this. They don't want the same level of regulation on their fund investments as maybe probably a mutual fund, which is also targeting a 1 lakh, 2 lakh rupee investor for a year. Because of the over-regulation is becoming much more difficult to raise money. The cost of even running such funds is going up. Like a 200 crore fund will have a custodian, it will have a trustee, it will have a valuer, a separate auditor, a separate accounting firm. अब यार इन सबको manage करते and you have to be very fast at deploying money.
Yeah.
Same thing in the US or other developed markets is very quick.
Yeah.
Now we're not targeting investors. Like all my investors are family offices. They all have net worths of $25-30 million plus. They know what sophisticated product they're getting into. They're not your typical retail investor. But I'm subjected now to the same regulation as them. So I think that has to change. The regulations around their fund investments need to be lower. I'm not saying just it's free for all, but you have to understand that in other ecosystems they're moving much faster than us. Today, if a company approaches me, it'll take me 6 to 9 months before they'll ever see money from me.
Yeah.
Simply because मुझे इतनी सारी processes करने हैं before
you can start
giving in the money, right?
Yeah, correct.
Compared to the US, people can get funding within a week, within 2 months, within a month. That's the speed AI is moving at, and if you're not able to match that speed, talent is going to move to other markets.